Okay guys, hope you're well. Let's kick off today. I apologies for the last 1 or 2 videos that didn't have any sound. I don't know why that was. I've not done anything different, but I have just done some tests again and everything seems okay. So I don't know what happened. Genuinely don't know what the issue was. Right, okay, let's just start on and we'll go from here. I'll throw out an extra video next week to make up for it, guys, but let's just crack on from here. I'm going to go through all these pairs today. I'm going to kick off with euro dollar from the top, and I've got my DeMarca arrows set up. I've got DeMarca lines, my DeMarca trend lines, DeMarca trend support. What I've got here, I've got DeMarca resistance, DeMarca trend support, and my horizontal resistance as well. And I've got the moving averages on here. So the arrows sort of preempt potential momentum and direct near-term direction. So for me at the moment, I am eyeing up not big moves. These doesn't seem to be that they're going to be big moves, but the blue arrows indicate there's going to be some potential trajectory towards the 111.30 level here and maybe on up past that. But right now, again, we've got previous highs here around 111.75. So there's not really, even if we beat that resistance and get above there, there's only around 70-80 pips to the upside. For me, that's not exciting, and euro dollar as a result is not something that I'm going to be looking at for the next few days. Euro Kiwi, on the other end, my personal clients are doing well with Euro Kiwi. The red arrow indicative of some the new red arrow cancels out all previous arrows. Okay, nothing happened with the previous arrows, so now we are going on and looking to sell off below 169. We have broken 171 right there, and anything near below now 170, which is there. Anything below here is deemed not extremely bearish, but definitely bearish. Okay, 170, a big psychological level, as was 180 on Euro Kiwi. Let's have a look when we were last at 180. Maybe pretty much, yeah, it was, wasn't it? We didn't quite hit 180. It was 179.30, 179.30 before. That was October 2018, before we come crashing down to 162.80. So pretty much from 179.30 to 160. 280, 1650 pips, pretty much, I think, isn't it? Absolutely incredible, 1650 pips. So we've got back. Look at what this looks like. I don't know what that looks like some sort of hangman gone wrong there. But right now we are at 169.80, and we are looking to edge lower. But what we have had recently, we've carved out a bottom, so it seems, over the last 18 months. And the highs on the weekly chart now, the lows, I should say, have been getting higher. So if this could be a low, if this potentially could be a low, or whether you could class this as a low, and now we've broken that, then it's bearish. Okay, but if this could carve out a low here, then it is bullish. All right, but if this 169 level doesn't hold, and we do trade down below there, okay, then I'm sorry that we're going to see lower levels towards 162. This year, if I just carve out a Fibonacci, I'm just going to go get this chart black here, just so you can, the Fibonacci stands out as it always does. I'm going to get a fib up here, fib retracement going from, now where, I'm going to carve this low here. So pretty much the 61.8, we got back to these highs here. Just sort of the break line there at 177 pretty much. And that was close to getting around 75–80% of the reversal, okay, from the high of September 2018 to the low of March 2019, so 6 months in between. And that nearly tested the 70-80% line there, and has now since come back below the 61.8 and the 50, and has tested 38. It's bounced off the 38, all right, and the 38 has seen some notable trading activity along these lines. It's been about the median, I'd say, the 38.2 line here. It's been about the median. So if this line does break, which at the minute holds at 169.30 something, 169, no, I'll stand corrected, 169.15. 169.15. So anything below, I'd say 169. We're selling off a few hundred more points. So I'm going to get ready on that one, ready for the action as and when it materializes. But for now, I'll hold off, but I'll keep a very, very close eye, excuse me, a close eye on that, most definitely. We have got a very strange pattern here on pound Kiwi. This W formation, again, I'm staying with the weekly here. I love it. I love it. It's sort of an inverted shoulder with an inverted shoulder. It depends how you look at it. All right, we could have the head and shoulders here, or we can have the head and shoulders here. Either way, we've carved out a double top. All right, and the last few times we've hit these levels, we've sold off. Okay, but we seem to be consolidating above $2, which is what I like, and I do think we're going to test higher ground, much higher ground. In the medium term. For the short term, however, I do think we need to just, again, that round level of $2, pay very close attention to that. And if it does break again, we will have another 400-500 point, maybe 1,000 pip sell off down to 190. But personally, I do think we're above $2 now. The market has worked hard to maintain ground above here. And if it can hold above here consistently over Christmas, we're going to see much, much higher level. Let's have a look more short term. I am more bullish short term. All right. I am, purely because on the 4 hour, the highs were getting lower. Now all of a sudden they've started getting higher, and they got slightly lower here. But if we can continue above this line and get above 201.45, 201.50, we're going to carve out much, much higher ground in the short term as well, maybe several hundred pips in the next week or so. But we do need to get above 201.50 ideally as a round level. All right, anything above there, I am very much more bullish on. Okay, 201.50, a nice round level as well. Let's check out pound Aussie. A few of our clients have cleaned up on pound Aussie, notably the one DeMarca that gave us the signal yesterday. It automatically bounced off. Excuse me, 189.50. But this DeMarca here, showing that the interim after this consolidation here, and I noted the consolidation this time last week, and that it could last for another 2-3 weeks, but it has now broken out. And from here, we've got some nice trades, potentially testing that 195 level. Oh yes, 195 level. Okay, there's nothing really to stop pound Aussie now. Really motoring on from here. I might get a trade on this in the short term, guys, so be ready for that. Pound yen, again, very similar to pound Aussie, isn't it? Very similar indeed. And what I like about this, apart from the DeMarca that has shown us interim support, we're building and we're now above this DeMarca resistance at 142.74. So 142.74. The market is now 143.05. We're 30 pips above that. If we close above here, if we close above this DeMarca support, I'm telling you, we're going for much higher levels, back towards that 150 level. Because what I like about it, we've built up ground since the summer. We've came off a higher low. We've consolidated at the next high region, consolidated, held the DeMarca trend, and now we've built up, and this could be a coiled spring, and we could test 150. Absolutely no problem. And you know, these levels here, previous levels, previous, I wouldn't say highs, but earlier this year in April, 146, 147. That is pretty much where the market is intending on now. It's be a choppy road up the next 400-500 points, but it should now make its way up towards those previous highs if it holds these DeMarco resistance. All right, if it doesn't, then we are going to go back down to within the range, 139, 142, 141, 143, 140, etc., etc. All right, guys, I'm going to just quickly look at silver. All right, again, I'm not overly enthused with silver. I'm a massive silver bull long term. I think everybody should have some silver, but for me at the moment, in the short term, something needs to happen. Ideally, we get back above 17.25 for any buying. We need to get anything below here is not worthy of a trade. I do think the downside is limited again. As I said in the last update you didn't get because the sound wasn't working, I did say that for gold and silver the downside is limited purely because although technically it looks like we have a lot of room to go to the downside, which is correct, but where the markets are in terms of the central bank policy, specifically the Fed, only looking to reduce rates into the medium long term, I do think this is limited. And with the trade talks, everything else in the US and China, there's always that news that can just bolster gold and silver, and they're ready to just pop up as and when these jitters come out in the financial markets. So I do think as a result of all those factors that the market is going to be limited to the downside. $16.50 for silver, potentially $16 maximum, and for gold, I've not got gold on here. I'll just get gold on though. And I do think it's limited to a 14.25 for gold as well. 14.40, 14.25, 14.40. We have carved out lows here, but again, unless we get sort of back above this median line here, let me just go and get a more professional line there. 14.85, pretty much 14.90. Anything below here, again, is not worthy of a buy. We're just going to be in that range, okay? And we are subject to maybe drifting back lower into the new year if volume wanes and news remains optimistic and markets are rallying. So keep abreast of that, but I'm not looking to trade either of these in the short term. Dollar yen, obviously a dollar the counterpart of XAU there. It is interesting. The lows are getting higher, which is what I'm liking for dollar yen. It has done since the summer, and we could break up above 110. It doesn't seem to be doing it. It's just a consistently strong, fairly robust pattern we're seeing. But as long as it's contained below 110, there's no reason to trade this. There's no reason to look long, and right now it's fully supported below 108.50 and essentially 107, 108.50 are the support, and the resistance is 110. Unless we get above 110 and hold there, we're not buying, and unless we get below really 107, we're not looking to sell. So at the moment, again, it's range worthy, it's day trade worthy, maybe for 10-20 pips a time. That's fine on my 30-minute strategy. Please message us about that. But for this, it's not really worthy of a trade, if I'm honest. That's it for now, guys. There will be potentially trades on the pounds that we're looking at, maybe one or two other markets. Anything else, I'll keep you in the loop. Thanks very much, guys.